Hi folks, Scott here, and this is the wrap for Wednesday, September 18th. Well, the Fed made its announcement, a big surprise to some and not a surprise to others. I'm proud to say that our trading room, in a poll we did a couple of days ago, correctly predicted there would be no change, which I believe was the minority view on, at least among the talking heads if you listen to CNBC or Bloomberg. And trading room was about 2-1, predicting there'd be no change. I will admit I was in the minority and I was wrong, but interesting and nonetheless. So that's really neither here nor there. What's important is that today was Fed Day and that we closed higher. So I thought it'd be helpful to show you the results of fading gaps after closing at least 0.5% higher. Now we closed actually a little over 1% higher, I believe, but to keep the sample sizes worthy of even talking about, I had to loosen the parameters to closing at least 0.5% or higher post-Fed day and above the 200-day moving average. And there you go. About 2-to-1 odds on a terribly small sample size of gapping up the subsequent day. Down gaps using an end-of-the-day stop have had a strong bias for filling. Up gaps, 7 of 11 have filled, which is a little bit lower than average win rate. Again, small sample size, but it's been a money loser. So these have been small winners and decent sized losers. So who knows? Maybe this move is not over. I would say overall this is a long bias, apparent long bias, apparent only because of the small sample size. All right. Now I will also say that's at odds with what my gut tells me. I think I'm interested in shorting an up gap, and I would not be surprised at all to see our gap guides and the worksheet favor shorting an up gap. But if so, I'll probably do, well, we'll see what these numbers look like with MTG stock parameters, but it's going to be the same or weaker than this, so maybe there'll be a little bit more than normal volatility post-Fed, and I would reduce my position size because of that. All right, and let's show today's action. Actually, we ended up with nominal gaps. The white is really hard to see. We had a small gap up in the NASDAQ that eventually filled. We did talk about getting long the NASDAQ if it filled its gap today, and I think some folks did that. I did not. The Dow may have stopped you. I can't tell if it filled its gap this morning or not. Rolled over, got below its lows, and then rallied hard on Fed announcement. And then you had a small, hold on, I'm looking at the wrong day. Nominal gap down. A little bit hard to see that. And 1.25, 1.5. So I did not trade it because it was too small, but I was willing to trade it if it was a little bit bigger. So let me show you my thought processes and the research supporting it. So per the worksheet, at a high level, you maybe would have thought it doesn't look overly appealing. It's close, but not quite at my criteria of 66 and 1.3 profit. I mean 66 and 1.2 profit. I'm looking for 60 and 1.3, but certainly this is close enough for me to take a look at the gap guides, which I'll do very briefly. And there really wasn't any much of a gap. We finished right at the highs yesterday, so you have to disregard this, but you'll see the numbers above the highs did meet my criteria of 60 and 1.3. Lots of factors in play. Fed day normally good for shorting up gaps if you use an end of day stop. So that's not something I do nor recommend. So you really got to discount that number unless you're going to hold through Fed announcement. Wednesday of OPEX week tends to be a bullish day historically, at least during bullish markets. After an unfilled up gap, generally good odds for filling. Hold on, I'm doing these wrong. We had a down gap. So Fed day is a little bit weak maybe for down gaps. Wednesday of options expiration week is opposite, sort of strong, unfilled up gap, strong, down gap to an inside day, a little bit weak. So pretty mixed there. So we have small gaps, the UCO zone, anything up to below 16.99. Good trade in the ES historically. Same with the YM. NASDAQ, I believe, gapped up, so it would have been up there. And Russell was neutral. Looking at the ETFs. Spider confirmed with the ES showed. Good numbers. Using a 50-cent stop of the Spider. Same with the diamonds. Q's again, I think, gapped up. And then Russell was a little bit neutral. So here's what I wrote in my pre-market comments. Posted right at 9:20. And I did have a typo, which I corrected. I think everything was correct by 9:26 Eastern, a minute after my deadline for having accurate data on the site. Just internal deadline. I posted at 9:20, but I'll explain that in just a moment. It was minor. I'm just being very transparent, which is always my goal. So the other research I showed was last night, fading gaps on Fed day using an 11:45 time stop. So you can look back in history what happened on Fed day if you traded the gap but closed out ahead of the announcement, which is what I always would have done. And up gaps were risky historically, down gaps not. So it was another positive. So I said overall slightly positive guides, both positive and negative factors for gaps in either direction today. Like yesterday, small gap size, potential mixed opening directions were my main concerns, as well as the risk of pre-announcement volatility. Sometimes you'll get a little bit of volatility as the last player's posture ahead of the announcement. I said if the ES opens up or down with at least 2 points of opportunity, so less than 97 and greater than 1701, then I was willing to discount and take on these concerns here. And I need at least 2 of the other 3 futures also opening down. This originally said up, and it also originally said all 3 other futures indices, which I said it correctly in our trading room, which is one of the benefits, and folks caught that I said it one way but posted it differently, so that's why I corrected it as fast as I could. It was neither here nor there, and did not matter because we opened above 1697 by a couple ticks. I said I'd fade the open half size, exit prior to the Fed announcement. That was my plan, and again, didn't meet my criteria, so I wasn't long. It bounced around a little bit. I went long, and I pulled back to the open at 98. Ended up getting stopped for 1.25 points. Thought we had a decent chance. We showed some data that odds had favored historically 3-1 of rallying on a small down gap into Fed announcement. That was not the case today. Every day is different. So I took a small loss there, called it a day. There was nothing compelling on the 15-minute nor first hour range trades for me. And in fact, I did no probability trades the rest of the day. So there you go. That was my day, and that is the wrap for Wednesday, September 18th. Have a good one.